All right, it is 12 noon on Wednesday, so that's Facebook Live. So we want to thank everybody for joining us. And as always, I'm here with Elizabeth Lopez, and you can see her with her new super cool glasses. And we got Tom with his super cool glasses, and I've got me with my cheap old readers. But
well, no, these are my first readers, so I'm kind of celebrating this, and I finally gave in, so I could see now.
it's kind of exciting, she's been looking at us with these glasses all these years, thinking, I do not want to get like that. And now, welcome to the club. So
that's why when she talks to us, she takes them off.
Exactly.
I do.
we look better.
Now, today we're going to cover a smorgasbord of things that are happening. There's just a bunch of little things that are happening. We're going to cover a lot. Now, to the untrained eye, it may look like we came unprepared, and that is not the case. It is just that there's a lot of little stuff going on. We want to touch on a lot of topics. But again, Elizabeth in this industry forever, came from the banking industry, and Tom Bennick also been in this industry forever and another decade, and came from the banking industry. Also, we've been together for quite some time.
Forever. And Mike been in the business forever. So
forever.
We've got a lot of forevers.
Yep. So anyways. Couple things we'll just hit today. A little bit of the condos. We've been doing some condo classes. We're going to cover some changes as far as low down payment programs that are coming up for multifamily housing. And some things we're looking at hopefully doing. We may leak out some goals on maybe some new construction on multifamily that we're going to try and get going. Just a lot going on. Rates, don't want to touch on rates too much. Rates, we had a little bit of a dip down. Now, I didn't check them this morning. Hopefully you guys don't tell me some bad news, but we'll just cover a few topics or anything else you guys might want to talk about.
Yeah, rates have kind of tapered off, I think, as of the last couple of days. I don't know whether they've ticked down or a lot, but they've kind of been flat. So regretfully, with some of the things that are taking place in other parts of the world, I think it kind of slowed down the bond market a little bit, but
Yeah.
We certainly want to touch on condominiums, which we'll do, and some other programs that are, out there still available, whether you're a first-time home buyer or not, whether it's conventional, FHA, VA. So we're going to just touch on all kinds of different options, and there it is.
All right, so I figure if I'm going to cover these as the rates are bad and we're frustrated, might as well cover them as we get a good day. So, you know what, here we have 5 days, and then here we have a month. But you can see, look at going down is always good. So we'll take what we can get. Some people are saying maybe we get some good news tomorrow. If I had any loans right now, I'd probably go ahead and just lock them. So I most likely wouldn't hold out to tomorrow, even though individuals are saying that tomorrow could be a good locking day. So we have 1 day, and you can see from the 1 day we had a drop, a little bit jumping around, but it is a little bit lower. And if you look out a couple of days, we don't see too much. And unfortunately, when you see something like that, it usually means that there is some turmoil that has happened around the world, and something has happened that has caused the bond yields to go ahead and drop. And not to get too much into it, but what happens is, when people start buying bonds, like anything else, when you start buying something up, the price goes up. So if you're looking at, you're buying $100 bond, we'll say, and the goal is you buy it at a certain number, then you cash it in for $100. So if you're buying it at 90 and you cash it in for 100, it's giving you a return of investment of a little over 10%. If you're buying it at 95, it's giving you investment of, we'll just call 5%. So as the price runs up, the yield starts going down. So you can see when there's turmoil, people will go ahead and often start putting their money into bonds. They'll buy bonds just to be safe. That runs the prices up, which brings the yields down, which, ends up helping our 30-year rates. Now, what's been especially frustrating in our industry is the indicators have not lined up the way that we've expected. Yeah. So, things have been just crazy.
I think we could say that for like this whole entire year. It's been, all of a sudden something happens and we're like, oh, the rates should be good tomorrow. And then all of a sudden there's a hike. We're like, okay, we lost our touch or something, because you're right. It hasn't been lining up at all with what we've seen in the past.
Yeah, or the thing that's crazy, you'll see like early in the morning, great 4 a.m. Everything looks good. Well, this is going to be a good day for lock-in. And then by 10 a.m. or 9:30, by the time your rates come out, you're back worse than you were yesterday. So that's a little bit of sometimes that bipolar emotion that we fight with. Is you're all excited, and I could send you these 3 texts I sent out to the team a couple weeks ago where I was all excited. I shot the text out. It was showing the rates were going to be really good, and then as soon as I hit it, they jump back up. I sent another one that said so much for that. And then as soon as I hit that one, the rates were back up worse than they were the day before. So you just never know.
Yeah, I wouldn't think that it would be any kind of manipulation taking place, but just let's throw something back on the table. If you throw back that chart for a second, I just want to point out something or elaborate on something that you pointed out, if it's still there.
Yep.
You'll notice, so just to give everybody a heads up, our lock desk, when we lock a loan for rate, is not open 24/7. It's open, I think at 10:30 it opens when rates come out for the day, and it shuts down at latest 4:30, 5 o'clock. If it's not locked by 5, give or take 6, the party's over. Well, now look when the dip takes place at the time frame. So they'll drop when we can't lock a loan, but the second the lock desk opens, of course, then we get our bump.
Right.
That's right there. That's right. And that's
this isn't locking time. This is locking time.
That's why I trained myself. I don't look at it at 4 a.m. I look at it like at 11 or something. I'm like, just give me the real deal.
Yeah.
Well, that's because you're more respectful of your mental health than we are. So, anyways, all right, let's pop in a little bit. We're going to talk a little bit. We posted this one here, and usually this is one that sort of came out. I'm not always the biggest fan of these posts, but with Hometown Heroes being gone, there is a lot of stuff out there still. So we still do. There's still a great $10,000 bond money out there, and USDA loans, FHA, VA are good. I just did a home run mortgage, 10% down, no mortgage insurance, and the interest rate was probably a quarter point better than the going rate. So that's potentially there. Now, the only problem with home run, I don't know if we're going to be able to get you that until we put in the address. So a lot of these programs that we have out there are, they're address specific. So we plug it in once we're under contract and it pops out. Hey, look at this. We can get you this or that loan. And some of the ones that are kind of interesting in our company, we're the only company that's been allowed some of these, is you'll have some of these bigger companies like Citi or Chase or some of these large companies. They need CRA credits. So it's community redevelopment credits that they need to show that they are reaching out to the community to be able to appeal to people that are in, lower and middle incomes. But they're not getting the credits they need. They're not getting what they need. So they said, hey, the mortgage firm, can you guys go ahead and help us out and get these credits? So they've offered some of these programs out to us. So we have the ability, to maybe get a match with a couple different of these huge companies and get a match and help our customers out. Now, on the positive, we can get them really good stuff. On the negative, it's like being in the banks again, trying to close a loan. So it can be a little bit extra work, but sometimes it's just a much better loan and it's hard to pass up on.
Mm-hmm.
No doubt. We were all at banks, and so we know we're getting into the last quarter of the year. I believe the banks have to try to allocate so much funds per year towards community reinvestments. And so we get the benefit of enjoying some of their loan programs. But as Mike says, we're also going through the bank's underwriting process as well. I think Rocket, we have one now that is available to us, and a couple other large banks that are looking to spread out their reinvestment investing.
Yeah, you're right, reinvestment. So,
but I will say, I think one of the positive things is also the sellers, I think, are being a little bit more patient now when they have a contract, executed. I think we kind of give them that assurance. And if it's one thing that I could say that I think we do versus the banks is our communication's a little bit different. So as long as we're always keeping everybody in the loop, whether it's title, the listing agent, the sellers, whoever it is, that things are going smoothly. I've kind of experienced personally that they're more than willing to kind of extend a day or two or whatever, just knowing that the process is happening, that it is going to go, that it's going to close. But yeah, we're kind of like at, somebody else's mercy at that point. But I do think they're being a little bit more lenient. It's not like, a few months back or beginning of the year that everybody wanted like a 10, 20-day closing and we got to get it done. So I have seen a little bit of that. I don't know about you guys.
Yeah, without a doubt. I mean, we tell people, if you bring me a house contract on this week, early in the week, we can generally get you closed the next week. But you start bringing us when we're looking at condos, or if we get a match on these CRA programs, we want to be able to offer, if there's something a little bit better out there, we want to be able to offer it. The one I had last week was I needed a 1-day extension, and I got to thank the listing agent for getting us that. But I calculated, like right now, I calculate that, and there's no crystal ball, but hopefully we can refinance people into some better rates within 2 years. The savings to my customer for those 2 years was $13,000 between having no MI, there was no discount, no point on the loan, and the interest rate was low. It was a $13,000 minimum savings to my customer by getting 1 extra day to close, by getting the condo approved by one of these outside companies. So you know what? It's a tough one because you got to make a judgment call on it. But when you have an opportunity to really get your customer a much better loan, and even though it's going to be a little bit harder work, we kind of owe it to them.
Absolutely.
And
yeah,
we definitely owe it to them.
One of the things that we don't like to hear with these kind of programs is called double underwrite. It's underwritten by our company plus the company that's funding it, whoever it might be. But because those programs are so well worth the double underwrite, like Mike said, they're worth going through a little bit of whether it be an extension or something else, it's well worth it.
Yep. Yeah. All right, let's get back. We just got a couple. Oh, let's just touch base on. We have our Halloween happy hour. So on the 26th, we have our Halloween happy hour. So it's going to be 5 to 7:30, and we'll want everybody dress up. We'll have a couple good things. We'll have a game. Last year we did a name the villain, and we'll probably do that again. We flash up some villains for you and where they came from, what their movie, series, or show was on, and whoever gets the most right answers, we went ahead and we donated to your favorite charity. So we'll end up doing something like that. So hopefully we end up seeing a bunch of people at our Halloween happy hour this year. And I'd like to have it in the office. We don't have a lot of space, but it's nice to have people in there. We had it packed in pretty good last year, and hopefully we'll do the same this year.
Now, Allison is asking real quick about those community reinvestments. What kind of loans are they? They're typically conventional loans, correct? Guys,
yep. Conventional or FHA.
Yeah. Depending on, again, the type of loan it is. Mike mentioned some of them are in certain areas that offer certain other types of loan programs. But if you have a property in mind, please reach out to us or send it to us, and we could see if it falls within that area.
Yeah. And some of them. Oh, go on.
No. I when I tell also people is when you contact us and we get a chance to talk to you, the best way is also because it's not just where it's located. It's also some of them, not all of them. We got to check out your income. We got to check out your credit. So it's not just where it's located. I just wanted to point that out because the criteria for each of these types of programs that you saw on the previous page, they all have different things that we got to check off. So some of them are where they're located. Some of them is income. Some of them is, credit. And they all require different ones. So I like to kind of have a bigger picture. And we always say, just go ahead and fill out one of our applications. We'll do a soft credit pull. It's not going to hurt your credit, but at least we have the full picture of where you stand as far as your income, credit, savings, what we need to do and what programs you qualify. But I think it's easier just seeing it as a whole. And then be able to present to you what you could qualify for.
Yeah.
Spoken like a true banker.
Yeah, that's what I did for the last 20 years. So. I tortured myself for 20 years.
You're right, though, because all of these programs do have different limits, whether it be income. And again, you skip over a county line or what county it is, then those change. And so, yeah, we'll need most of the information, all the information.
I think it's the glasses that made me just sound smart, Tom.
Wow.
I find myself really listening to what you have to say.
Impressive.
They seem to be working.
So you're right. I got to keep taking them off. I need to keep putting them back on now.
I might need to clean mine then.
All right. Now, this is near and dear to all of our hearts, and we've been doing some condo classes here. But this coming Tuesday, we've got a condo class in our office. And it's about taking control of the condo market because the condo markets have just been they've been tough. They've been tough on insurance. They've been tough on They've got to get their engineering reports, inspections, things like that. And our condo questionnaire has expanded. It's expanded a lot, and we need to start addressing some things. So the problem we run into is these condo questionnaires come back to us. By the time we get them a couple days before or a week before closing, now we're trying to figure out some of the answers, what they mean, how we can work around them. And then before you know, you're a couple days before closing when your condo gets turned down, meaning that it cannot be financed. So if you're putting 25, 30% down, we have the ability to flip it to alternative financing sometimes. But if you're putting less down and we can't get, if you're putting 5, 10, 15, 20% down and we cannot get a full review on it, you're done. And the tough part is, as a customer, you might be $1,500, $2,000 deep in inspections and appraisals, condo questionnaires, interviews, everything else. By the time you find out that that condo is not financeable, and I get frustrated because I feel that the seller and the listing agent need to have that information up front when they go to sell the place, and they need to know whether the condo has a reasonable expectation of being financed, or they need to have the information to us so we can make that determination, or else they need to be going with cash. And even if you're selling a condo cash, you need to provide certain information to the buyer. If you know things that are coming up, you have to provide information like that to the buyer. So I feel a lot of this information is not being presented, and these buyers are under cost, spending a lot of money on stuff that they should have known at contract.
And even on the other side, I think as the sellers, when you're listing a property, I think the seller would appreciate, I guess, a listing agent to know this information, and just kind of putting it back on that, just because a lot of times the sellers do have access to the documents that we require. So it's just easier to get the documents up front, and you're not wasting the seller's time, because I think we don't know what the seller's motivation for selling is, or what they're going to be doing. Are they moving somewhere, whatever? We don't want to delay that either. So I said this before, you're going to look like a total superhero in front of your sellers as a listing agent, to have all these documents up front and know that you're going to be able to run smooth with whatever type of offer we're putting out. But again, like these documents is something that your seller should have access to.
And it's going to be impressive to show up on a listing appointment with this list that we're going to provide, or to show up and say, these are the things we need to have a nice, clean sale with no issues. And if you get that stuff up front, it really makes a big difference to the buyer.
Mm-hmm.
If you're selling your condo because you want to get it sold before everybody knows that there's a huge assessment or that you got a lot of problems, but that's there, that's going to come back and haunt you. When somebody buys your place and they end up getting hit with a huge assessment, it's not uncommon to get hit with $100,000 assessment that you're paying on for the next 10 years. But when you sell your place and that person ends up with that assessment, and it was found out that you knew of it or should have known of it, it was disclosed in the minutes, it was someplace, and you didn't disclose it, it's going to become a problem. I've spoken with 2 lawyers in the last probably 2 weeks that have talked about all the potential problems that they're going to have with condos, and not just really with the HOAs, but with the sellers not disclosing information. So it's already a problem right now when people sell houses and then they've hid problems. But right now, with the condo market being in, where it is, if you're selling your condo because you're trying to unload it before some costs start coming up and about those costs, that's going to come back to haunt you. You want realtors that are serious professionals. And if your realtor walks in and they're listing this property and they haven't gathered anything, budget, balance sheet, master insurance policy, at the very least. I mean, before, if you got us those, I was 90% sure we could finance it. Now you get me those, I'm 30% sure we can finance it, because the majority of our denials are coming from that condo questionnaire.
Yeah.
So everybody's in catch up on deferred maintenance that's been ignored forever. So they got to get caught up.
And to get an idea on the depth of the colonoscopy that we have to get from the condominium, we need to get the actual minutes. When they have their meetings, we need the minutes. And even if they're even mentioning we're going to need to do some kind of maintenance in the days to come, and that's in the minutes, that's a red flag. So that's how detailed and how much information we need to get from the condominium association.
Well, here's the crazy part too. Just yesterday, to kind of give you an idea, I'm glad you touched base on that, because we asked, on the condo questionnaire, have you had, I think one of the questions, I guess, minutes within the last 6 months, right? And It was a very quick, short and sweet meeting. And then they were like, okay, we need the minutes before that. And then we're like, okay, do you have minutes before that? And then the minutes that I got was like, I think from like 2 years ago. And I'm like, there's no way that these people have not talked within the last 2 years. And then all of a sudden they have a, June 2023, meeting. So it's going to get questioned. I mean, those condo questionnaires are there for a reason. I kind of see it as, I get it. There's a lot of stuff that's being asked, but it's also to protect our buyers. And of course, it's a totally different ball game right now with condos. And yes, we will dig and dig and dig. And the stuff that just comes up after, it's no longer, here, Elizabeth, do you have here's the budget sheet and do they have enough reserves? It's way more than that now.
Now, I mean, when have this stuff all generated, it was really triggered by the Champlain Towers collapse down in Miami. So I tell you, when that first happened, I have a new take on that one. But when it first happened and we started having a lot of fallout afterwards, my initial thought was, we've had one condo collapse in the history of condos, and it was 12 stories tall, built on sugar sand down in Miami. And now it's becoming a huge negative effect on every condo in the state, every 2-story condo. But you know what? The deferred maintenance and the neglect that's happened out there is incredible. And, you have everybody who's like, I'm fine. I got 5 more years, or I got 10 more years, or I don't want to fix this. I don't want to fix this. So nothing's getting done. Nothing's getting done. So there are a lot of problems out there that need to be addressed. And this has forced the condominiums to start addressing them. Now, the pendulum has definitely shifted to one side. And I will say, I tell people to go off on a tangent here. If I was in school right now, right, a kid in school right now, structural engineer for condominiums or some type of building engineer, building anything for condominiums, you will be set for the next 20 years because they got so much catch up going. But you can see the ones, and the one we just closed on last week. You want to talk about a condominium? It was beautiful. The management company was amazing. The condominium budget was beautiful. The reserves were set aside. Everything was being addressed and done right. So you do see those shining examples of some of those condos that are great, but then you see the other condos that needed legislation to make them do anything, and they're in a total catch-up mode. And for your monthly assessment, your monthly HOA fee to go up $500 is not uncommon, even for $300,000-$400,000 condos. So if you're up into the $1 million condos, your assessments can go up easily $1,000 a month as they start addressing some of the bigger problems. And that's what we as lenders, everyone's worried about. If you're qualifying somebody and they can barely qualify, but we barely qualify them to purchase that condominium, and their assessment goes up $500 a month, now they're going to be in trouble. And we're looking at potential foreclosures. So I definitely get it.
And even like the example that I have is just, we had the balance sheet, the budget sheet, like everything up front. Let's look at the insurance, because that's another thing. The insurance has to have like a certain percentage of your deductible. It's 5% or less. So, that checked off. There was like a few things that checked off. And then all of a sudden I get the engineering report and the building is pretty much almost falling apart. So what ended up happening, and here's where our frustration comes in, is just if you once we got to that point, we got the engineering report because of the condo questionnaire, and our borrower was already in the hole $2,000. That's a lot of money for them. I mean, the association had charged for the condo questionnaire, and then there was 3 people, so the HOA had to charge $300 a pop for each application, so that's $900 plus the appraisal, the inspection. By the time we were done and we couldn't even close on it, it was $2,000 just because of the engineering report, which again, it would have been something that we would have had up front and said, you know what, we can't do this. Everything else was fine. But, again, that's kind of what I think we're trying to prevent, is just that our buyers are kind of running into these issues. And then we're just finding it out at the end, right? When maybe it's something we could have stopped at the very beginning.
Or we have some that we've loaned on before, and now when we're checking up on them, they don't have insurance. Well, we loaned on you guys maybe 6 months ago. Well, what changed? Well, they either changed the insurance, or they dropped the wind policy, or they have co-insurance somewhere. So every day it's just a new thing with condos that are getting challenged.
Yeah. When we say like it's gotten tough, it's not like we're just trying to say, it's tough. We're not going to be able to do it. And we're just saying it. These are the reasons why.
We're trying to prevent the problems, then fix them in advance.
But I do want to say, though, I mean, it's an opportunity. I mean, I also think these things as an opportunity because you do have those condominiums out there. But the thing is first of all, if you're a realtor and it comes back to it, and I remember when we first started, you're afraid of everybody. You're afraid. I would ask for the social security number at the end because I thought that was too much of a violation. Now, whatever we need, we're just asking for everything. But as you come in and you get more confident and you're closing loans and you're good, you know that this is what you need to be successful and that you need these items to give your customer the best outcome. And your customer wants to follow an expert. So when you come in here and you say the condos are it's a difficult time for condos, if they don't know that, there's no hope. But everybody knows the condos are in a difficult position. So when you say, I am the condo realtor, I am the condo lender, this is what you're going to need to do. They want to hear that. And what we're saying is $350 for that condo questionnaire upfront. Get that upfront along with all the other ones because we're going to collect the items over the next 2 weeks. The seller has the easiest ability to collect them right there as they're thinking about listing. They can get it so much easier than us. Have it ready and done before listing so you know what type of buyers. Don't be accepting a 3% down condo or offer if there's no way that condo's passing a full review. So know what you're selling, know what you can get for your condo, know who your buyer needs to be, and be ready. But for somebody who comes in that's prepared, it's a good opportunity. And for listing agents, if you come in there confidently, you can be the king or queen of condo listings by coming in and just saying, this is what I do, and this is how we do it successfully. So I wouldn't be afraid of them, but I would make sure that you're doing it right.
Mm-hmm.
All right. Yeah, you almost have to.
Oh, go on, Tom.
No, I'm just saying, in this case, we almost have to really try to get ahead of it. Really try to get ahead of what's going on behind the scenes with the condominium.
Yep.
The buyers we can handle. It's what's going on behind the scenes of the condominium to proceed.
Most of the buyers we can handle.
That's true.
So, anyway. All right. We have good news, though, here, right? What's our good news?
Our good news is great news. The new conventional loan limits are going up as of October 11th to $750,000. Geez, if we look back at the history of the conventional loan limits over the years, and of course, they've gone up, but $750,000 is quite a bit of money.
I'm trying to remember when you first, the last one I do remember 362. But that wasn't too long ago. In your lifetime, Tom, or in your career, in your career, Tom, they were probably about $26,000.
I was going to say 59.9, I think.
Back in the days.
Back in the day.
You guys are so bad.
It is. Anyways, yes, I think we can start taking October 11th, and that's. We are able to start doing those. Yeah, well, it's October 11th. Yeah. But we're limited. Look, we can start doing them, so we can start doing them. If you got a 750, we'll get that 750 done. All right. So that's great news. And then soon to follow, because we're getting to the last or the end of the quarter, FHA will probably present their new numbers for next year, and so will VA, which will follow typically conventional.
Yeah. The one thing that I also wanted to tell, I know we're almost running out of time, but I wanted to say that the $100,000 Palm Beach County, the help that we were looking at. So I know that yesterday I had somebody tell me that they were kind of like reaching their limits on applications and everything else. I want to just shout out to Scott Anderson. I know he's not here with us right now, but he was there on Sunday, and I was in the office on Sunday. And I want to say this because I know he said, if you need help, we're here to help you. Whether you came up to us and said, hey, you know what, I need some help or not. But Scott sat there on Sunday just preparing and helping this guy, like just everything he needed, went down the checklist and I am just hoping that he just gets this, because the organization this guy had, and then just the time that Scott put into this on Sunday was absolutely awesome. And I just said, you know what, this is exactly what we were talking about. We want to help whoever we can, with this $100,000 Palm Beach County assistance program that came out. So, can we control the applications or anything like that? No, but the fact that we're sitting here, we said we're going to be here to help you, whether you approached us or didn't approach us for the help. I just want to say I saw it happen, and I just absolutely loved it. So kudos to Scott.
Yep. Yeah.
Boy,
Sure.
boy, Elizabeth, definitely. That was so kind of you to say that. Scott looked at these. It's $100,000 from Palm Beach County. You got about 5,000 people who went through there, and they're going to do 50 applications.
Mm-hmm.
And he jumped on it, and he's been going out there. He's been advertising, he's been talking to people. Probably had 20 people reaching out to him that he's been evaluating, and some of them have no chance. But I'll tell you what, he's got a couple, and he knew up front. He said, this site is going to crash. It's going to crash. I think they got 2 to 3 applications in, and then it crashed like 8:15, 8:30.
So crazy.
But he got his stuff in. His customers got their applications in before the crash. So I'll tell you what, if he's, again, 50 applications. So for one loan officer to get one of them, if he gets 2 of them, that's going to be amazing.
Yeah.
So, and he jumped on this early. Just saying that I'm going to be able to get it. And he did a great job with that. So the 20 people that reached out to him, not all are going to qualify, but they all want to buy a house. So he'll put them on a plan, and sometime over the next year, we're not in any hurry. We're on your time frame, but we'll lay out the process, and they'll buy a house. So good for Scott, and thanks Elizabeth for that call out for him. So
yeah, that list of things that were needed. That list of things that were needed was extremely excessive, no doubt. Good for him for getting that together.
Yeah, because it does take a lot of time, and
a huge amount of time, and then to get it in and upload it in the time frame that's a lot of action.
Yep, and I got to say, this gentleman that was there with him, it was so awesome, because I know that his wife was home, I believe, with their kid, or maybe I'm just making that part up, but I thought I think she was working or something was going on, and he was there and took like every single document that Scott asked for. Mm-hmm. And I told him, I said, you know what, I really hope that you're one of the few that gets this. I said, because man, you could just tell that he put some work into it, and he was just like, okay, let's get this uploaded. He did the class, he had his certificate, like everything was just in line. And we talked about how organized you have to be in order to get these programs. So that was pretty awesome to see.
Not just home with his kid. It was home with his kid at the house where they take care of,
just add to me.
Dogs.
Chickens? Do you have chickens?
I'm trying to find that. We've got a great thing on there. I'm just not finding the 5% down. Let's see if we can get that one. The 5% down.
Duplex or 5% down.
Duplex, quadruplex, duplex, triplex, quadruplex, 5% down. Jeez.
That's
Tom, give a little rundown on it though.
Yeah, it's 5% down. Duplex, quadruplex.
That's all, folks.
We're waiting for things to come out. What's it do? I think November something. Is it really being announced when? November something?
November 18th.
There we go.
Yeah, November 18th. So
just different opportunities that I think we have coming up. So something for, just to, like I said, not everything is out there for everybody, but at least we have a selection of programs that we could work with, and it all really depends on what you're looking for. So
yeah, I'm huge on multifamily, huge. And unfortunately, the numbers just haven't always worked. A lot of the places are a lot older. But, there's a couple things we have coming up. So we're not going to mention them this time, but maybe in a couple weeks, we'll talk about a few opportunities out there. So real quick, though, I do have, Brad was asking, is it too late to get in for the $100,000? And I think, Elizabeth, you said it's drying up. I would say put it in. It's got most of the stuff you need to get anyways. Yeah. But I would go put it in. But yeah, I think that stuff's probably going to dry up pretty quickly.
Yeah. And then again, we do have other programs. So I was talking to a gentleman yesterday, yesterday, and we talked about the 100,000, and then we talked about other programs, and he said, you know what, I may not need that one. We could probably explore some other options. So again, just make sure you upload your application with us, and Very, very simple application that we have. You're able to upload your documents right from your phone. So we try to make it very easy for you. And again, once we have the bigger picture, then we can tell you and help you see what other options are there for you.
Know your numbers first. Before you get in the car, you start looking around, know your numbers. When you find the place you want to make an offer on, you want to be sure your offer is going to get accepted and you'll be ready to close. And sometimes it comes across to us where your offer gets accepted because you were able to do a quick closing. I've got one that wants to close in 2 weeks. Luckily, this borrower's all over their documentation and their offer thankfully was accepted because of the short time frame. So if you got everything in advance together, reach out to us and we'll go ahead and get you ready to get out there and make your offers.
All right, now we got a couple questions. Rachel wants to know, can I bring my child to your Halloween party? And absolutely, we're happy. We'll have some candy there. Now we'll probably have a drink or two, and our contest is going to be, scary villains. So if they're going to be afraid to see like the Scream or Freddy Krueger or something like that, maybe we'll do that towards the end. Maybe you pull them out before that if your child is likely to have nightmares.
Or she would be afraid of any of the two faces on the either end of Elizabeth. You may not want to bring her. So
my kiddo's going to be there for sure. And then I also wanted to share tomorrow at our office, the mortgage firm in the conference room, there will be a first-time home buyer class. I'm going to be doing that class with Juana Consuela, and she's just so full of information as well with True Way Realty. So please join us tomorrow at 6:30.
Elizabeth's first-time home buyer classes are amazing. 6:30 at night. So you definitely want to attend that in person. And Rebecca also is asking, can I come to is the condo class open to the public? Absolutely. Absolutely. So realtors, potential buyers, anybody who has a vested interest in condos, if you're a title company, anybody. But again, we're going to start changing the way we do condos and expectations on condos, because we're not having our customers drop $2,000 to find out a day before closing that the condo is not financeable. So
I think this would be an awesome class just to take, to present somebody if they're looking into listing a property, a condo, just so you know what it is that you're going to ask them for and have that confidence to say, this is what's going on in the condo world. Let's not waste time and just get to work. So this is going to be an awesome class for the listing agents also that are going to be, that know somebody that's going to be putting a condo up for sale.
It's 11 o'clock. We'll have a little lunch afterwards. Kathy Anderson is always in charge of lunch, so she never disappoints, with always a little platter of desserts, which are phenomenal. Tom?
It's 12:37.
We are running late. All right, everybody. Thanks for joining tonight. Homebuyer class, tmfclasses.com. Go ahead and register, tmfclasses.com to register. Thanks again for joining. Have a great day.
Thank you much.
Bye.